The brutal truth about trading success. Why do 90% of traders crash and burn in the financial markets? It's not their strategies, their indicators, or even market volatility. It's what happens between their ears. I'm about to take you on a journey through my own trading battlefield, from devastating losses that nearly broke me to the psychological breakthrough that transformed my trading career. If you've ever felt the sting of a blown account or the frustration of watching profits evaporate, this is the wake-up call you need. Drop a comment below sharing your biggest trading challenge. Are you struggling with fear? Greed? Inconsistency? Let's start this conversation. My costly trading education. When I first discovered trading, I was mesmerized by the potential. Charts, candlesticks, and the promise of financial freedom. I was all in. I spent thousands on courses, consumed every trading book I could find, and convinced myself I had discovered the perfect system. Reality had other plans. In my first year of trading, I lost 70% of my account. Not because my analysis was wrong, but because my psychology was broken. I'd panic sell winning positions minutes before they rocketed higher. I'd double down on losses, convincing myself the market had to reverse soon. I'd break my own rules, then wonder why my results were inconsistent. Sound familiar? Here's a confession. During one particularly dark trading period, I became physically ill before opening my trading platform. My hands would shake. My stomach would not. Yet I'd still force myself to trade, driven by the desperate need to make back what I'd lost. What's your most painful trading memory? Share it in the comments. Sometimes acknowledging our struggles is the first step to overcoming them. The psychology behind market failure. Let's get clinical about why traders fail. Our brains evolved for survival in the wilderness, not for making rational decisions in volatile markets. When you see your trade dropping into the red, your amygdala, the primitive, fear center of your brain, triggers the same fight or flight response as if you were facing a predator. This physiological response hijacks your prefrontal cortex, the rational part of your brain responsible for logical decision-making. The result? You make emotional decisions based on ancient survival instincts rather than your carefully crafted trading plan. Here are the psychological traps that claim most trading careers. Loss aversion, the silent account killer. Studies show that the pain of losing is psychologically twice as powerful as the pleasure of gaining. This asymmetry explains why you might cut winners short to lock in gains, but let losers run, hoping they'll come back. I once watched a $300 profit turn into a $1,700 loss because I couldn't accept being wrong. My ego was more important than my account balance, until my account balance couldn't support my ego anymore. The certainty illusion. We crave certainty in an inherently uncertain market. This drives traders to overtrade during choppy conditions, add indicators until their charts become unreadable, jump from strategy to strategy, never giving any approach enough time. Seek, Holy Grail, systems that promise 100% win rates. I spent 3 years and thousands of dollars chasing this illusion before accepting a fundamental truth. Trading is about probabilities, not certainties. The emotional pendulum, fear and greed. The market is designed to swing your emotions between extremes. After several wins, overconfidence leads to oversized positions. After several losses, fear leads to missed opportunities. During drawdowns, desperation leads to revenge trading. I call this the emotional pendulum. And until you learn to center it, consistent profitability will remain elusive. Has your emotional pendulum ever swung too far? Share your experience below. The mindset revolution that saved my trading. Everything changed when I stopped trying to predict the market and started focusing on managing myself. I realized that profitable trading isn't about being right. It's about responding correctly regardless of market conditions. The transformation began with these 5 psychological shifts. Embracing uncertainty. Instead of fighting the market's uncertainty, I learned to embrace it. I stopped seeking the comfort of sure things and started thinking in probabilities. Every trade became a single instance in a long series of probability-based decisions. This mindset shift was liberating. I no longer needed to be right on every trade. I just needed my strategy to be right often enough over a large sample size. Trading small to win big. Counterintuitively, reducing my position size improved my performance dramatically. Trading smaller allowed my rational brain to stay in control. When each trade represented just 1% of my account, suddenly I could follow my rules with military discipline. Remember, your position size should be small enough that you can think clearly about the trade, but large enough that you care about following your rules. Developing emotional circuit breakers. I built emotional circuit breakers into my trading process, rules that automatically shut down my trading when psychology becomes compromised. After 2 consecutive losses, I take a 30-minute break. After reaching my daily profit target, I stop trading. If I break a rule, I close all positions and end trading for the day. These non-negotiable boundaries protect me from my worst impulses. The Trading Journal Revolution. My trading journal evolved from recording basic trade data to documenting my psychological state, my emotional state before entering the trade, my thoughts during the trade's duration, my feelings after closing, win or loss, patterns in my psychological responses. This practice helped me identify my personal psychological triggers and develop countermeasures for each. What psychological triggers impact your trading? Comment below with your biggest challenge. I respond to every comment. Redefining success beyond P&L. Perhaps most importantly, I redefined what successful trading means. Instead of judging my day by profits or losses, I began evaluating my adherence to process. Did I follow my trading plan completely? Did I manage risk according to my rules? Did I avoid emotional decision-making? On days when I answered yes to all 3 questions, I considered the day successful, regardless of P&L. Over time, this process-focused approach naturally led to consistent profitability. Building your psychological trading edge. Developing a psychological edge isn't something that happens overnight. It requires deliberate practice and consistent reinforcement. Here's the framework I use to rebuild my trading psychology. Step 1: Brutal self-assessment. Begin by honestly evaluating your psychological weaknesses. Do you feel FOMO when sitting on the sidelines? Get revenge trade after losses? Hesitate to pull the trigger on valid setups? Move your stop-loss when trades go against you? Identifying these patterns is crucial. You can't fix what you don't acknowledge. Step 2: Create your mental trading plan. Alongside your technical trading plan, develop a mental trading plan that addresses your specific psychological vulnerabilities. Pre-trade routines to center yourself. In-trade rules for managing emotions. Post-trade reflection practices. Clear criteria for taking breaks. My own mental trading plan includes 10 minutes of mindful breathing before market open, a mid-session mental check-in, and a post-trading review focused on process adherence rather than outcomes. Step 3: Simulate stress before it happens. Elite military units don't wait for battle to test their mental fortitude. They create stressful training environments to build resilience beforehand. Traders can do the same. Use simulated trading to practice emotional control. Gradually increase position sizes to build tolerance. Intentionally expose yourself to challenging market conditions in a controlled way. This stress inoculation builds psychological calluses that protect you when real money is on the line. Step 4: Build a support system. Trading can be isolating, which amplifies psychological pressure. Combat this by joining communities of like-minded traders, finding an accountability partner who understands trading psychology, working with a trading coach or mentor who emphasizes the mental game. The most successful traders I know all have strong support systems that help them navigate psychological challenges. What's your biggest psychological trading struggle? Share it in the comments, and let's build solutions together. Advanced psychological techniques for market mastery. Once you've built a solid psychological foundation, these advanced techniques can take your mental game to the next level. Cognitive restructuring. Learn to identify and challenge destructive thought patterns. Catastrophizing. This loss means I'll never succeed. All or nothing thinking. I either need to be perfect or I'm a failure. Emotional reasoning. This feels like a good trade, so it must be. Replace these with more balanced thoughts that reflect trading realities. Visualization and mental rehearsal. Elite athletes visualize successful performances before they compete. Traders can mentally rehearse executing their strategy under various market conditions. Visualize maintaining composure during drawdowns. Practice the feeling of confidently following their trading plan. I spend 15 minutes each morning visualizing myself trading with perfect discipline. It primes my mind for the actual trading session. Mindfulness meditation for traders. Mindfulness strengthens your ability to observe thoughts and emotions without automatically reacting to them, a crucial skill for traders. Even 10 minutes daily can improve focus and concentration, reduce impulsive decision-making, enhance awareness of subtle emotional shifts. The ability to notice, I'm feeling fearful, without automatically acting on that fear is perhaps the most valuable skill a trader can develop. If you've tried any of these techniques, drop a comment below sharing what worked for you. The path forward, your trading psychology blueprint. If you're serious about joining the 10% of traders who succeed long-term, here's your action plan. This week, start a psychological trading journal documenting your emotions before, during, and after trades. This month, identify your top 3 psychological trading weaknesses and create specific countermeasures for each. This quarter, develop daily practices that strengthen your mental game, meditation, visualization, review rituals. This year, build systems that protect you from yourself, rules that automatically engage when emotions threaten your trading. Remember, the market doesn't care about your hopes, fears, or dreams. It simply presents opportunities. Your psychology determines whether you capitalize on those opportunities or sabotage yourself. I transformed from a struggling, emotional trader to a consistent performer not by finding better indicators or strategies, but by mastering my psychology. You can do the same, but it requires commitment to the process. If you found value in this article, hit that subscribe button for more psychological trading insights. Comment below with your biggest takeaway, and let me know what psychological topics you'd like me to cover next. What psychological challenge impacts your trading most? Share in the comments, and let's solve it together.